How's it going, my good old friends of YouTube? It's Stas here. Welcome back to another video. So today, guess what? We're going to break down the stock market. What else is new, right? And let me tell you, today, we had a pretty good day in the stock market. The S&P went up 0.2%. The NASDAQ went up 0.4%. We had the Russell up 0.1%. And the Dow pretty much broke even. So we're going to go over some charts, some stocks, my thoughts on the markets, plus more. So if you guys find value, hit the like button, subscribe, and check out my Patreon. If you want all my moves in the markets, that's on Patreon, link down below. And you guys could also get 50 free bucks from M1 Finance, which, by the way, you might know this, you might not. It's limited time, so make sure you get your 50 free bucks from M1 Finance. And with that being said, let's get into it. So we had a pretty good bounce back. Take a look here at SPY today. And actually, before we even look at SPY, do you guys realize how volatile the markets have been? Let me show you the VIX here. VIX. This is the volatility and the fear index in the overall markets, right? And the VIX this month alone has gone ballistic. I mean, it's not crazy. We've seen worse, way worse actually. But the VIX was at 14 in the beginning of November, and it just hit almost 21 today. And that's actually a move of about 30%. And it's actually been spiking up aggressively these past 3 trading days. And let me go back to SPY, and you'll realize why it's been bouncing the past 3 days, right? Just 2 days ago, right? SPY hit an all-time high at 473, and that day, that same day, we ended up tanking. If you guys remember, we hit that all-time high, right? We ended up tanking down to 469. We recovered back to 472, and then this thing cratered into the close. It dropped 5 points down to 467 on that day. Talk about volatility, right? And that's when the VIX started to really take off. And then the next day, yesterday, right, we saw SPY go to 469, back to 464, back to 469 at close, and then today even pretty volatile pretty volatile day today. In pre-market, we were at 469, markets open, we got to 465, and now we ended up closing a hair under 470. So very volatile. Excuse me. Jeez, guys, I'm choking on my words. That's how excited I am here. Very volatile of a day, right? And one thing I'm noticing is we got a double bottom on SPY. Let me show you this. You can clearly see it here, actually. One bottom at 465 yesterday, and today we had the second bottom, and we ended up closing on an upswing. Again, we went up about 0.25% on SPY, and that's extremely important because on the 20-day chart, what we're noticing here is we double bottomed right by the bottom of the uptrending channel. That's so important for this to now start breaking back out. And in fact, it's already breaking out. We're actually moving up in the after hours, and even at the close of the market, we closed above both moving averages. So by the looks of it, SPY wants to continue this breakout, continue this rally within the uptrending channel. And the volatility we saw the past 2 days, it was really nothing. It really looks like it's nothing at this point in time. And bulls are taking over. And when it comes to triple Q, let's pop it up. Triple Q, we're also seeing a classic, clear-cut, textbook double bottom. Very same thing, or similar to what we saw on SPY, right? On the 20-day chart, we're double bottoming at about, what level is this? 394, 395. We bottomed there today. We bottomed there yesterday, and that's towards, it is at the bottom of the uptrending channel on the 20-day chart here. And the thing is that's a bit different is triple Q actually closed under the main moving average here on the hourly chart. Even though it double bottomed and broke out, while SPY ended up closing above it. But it's really not worrying me too much, and I'm really going to be watching, not tomorrow because tomorrow's Thanksgiving. Happy Thanksgiving, guys, by the way. But on Friday, I'm going to be watching to see, do we end up seeing another leg up? Do we take out the 180 SMA here? Do we break 400? Do we take out that level from yesterday, yesterday's high being around 400? At that point, we might start making a move 405, 410 here on Triple Q towards the top of the channel. So today was a win. Today was a win for the Bulls. It really was. Solid day. And it really just seems like we're setting up for a breakout. So let me know your thoughts. Drop me a comment down below if you are finding value in this video. Despite my voice cracks and me choking, we're doing this in one take, guys. No edits. You know that at this point. If you find value in that, if you appreciate the content, I would really appreciate it if you hit the like button. It helps me out in the YouTube algorithm. And with that being said, let's talk about some stocks now. And these stocks, some are volatile. Some have been very volatile, some not as much. And eBay's number one, right? eBay's looking pretty good here. This is probably one of the more volatile ones. You guys can see it went from $79 to $70, back to $77. Now it just hit $71. Now we're trying to push $73. So this thing's been bouncing all over the 70s, mid 70s, low, high 70s throughout the past month. And now on the 4-hour chart, it seems like buyers are stepping in, which is super important, right by the bottom of the uptrending channel. Take a look at this, right? And we've been holding this channel for months on end here, since the end towards the middle, actually more towards the beginning of March 2021. And look, buyers are stepping in right by the bottom of the channel here at about 72, 73. And even though we're under the moving averages, which is a bit worrisome still, this is a good first sign that, you know, we're trying to start breaking out towards the top of the channel again. Now, I have one alert at 77. I'm going to put my second alert at about 70, maybe 73.50, right? That is going to be a pretty good spot for an alert, considering that is right by the moving averages on this 4-hour chart. Now, if we break the moving averages, which, if you notice, they've been resistance for pretty much all of November here as we've slowly been trickling down. If we break the moving averages at 73.50, we're probably going to make a move to 77, where my second alert is. And if we break that point, which has been resistance all of November, now we're talking a move to 80. That's where I think eBay's going, and that would actually put it right towards the top of this channel. So eBay is stock number one. Watch it. CDW is stock number two, which is very similar in terms of the pattern when it comes down to comparing it to eBay. You guys can see this one on the flip side, unlike eBay, is trading above both moving averages, right? We actually broke out recently above the 50 and the 180 SMAs here on the 4-hour chart. And today we had a pretty good day. We went up 2%. And by the looks of it, we're now gunning for the all-time high. Actually, let me double check. Is that the all-time high? Probably is. I mean, yeah, it seems like it is at 203. So now that we're at 199, maybe we start going towards 203. Maybe we even break that and go 210, 215, which will be towards the top of this uptrending channel, which you guys can see. Each time we've actually ran towards the top, we've taken out the previous high in terms of the past couple of months. You know, last time we had a high at about 183. That was back in April. We ended up breaking that high the following time we ran up, which is the all-time high of 203 back in September. So if this pattern continues, there could be another 10, 15 bucks upside when it comes to CDW. Now, let's talk about John Deere. This is one that did pretty well today. Ticker symbol DE. It went up 5%, and we actually broke 365, which I was looking at as a big level of resistance for John Deere stock, considering we failed there pretty much 5 to 6 times all throughout November. And now that they reported earnings, we broke 365, and on top of that, which is great, we broke above the downwards channel. Now, are we completely out of the woods? Not yet, I would say, considering we're still under the lows from, or the highs rather, from August, where we double topped at about 385, 390. So we're not out of the woods yet, but this is a good sign that we want to go and at least test 390, which again was the double top from back in August. So let's see what John Deere did. I mean, obviously, I already looked at their earnings. We actually talked about them on Patreon this morning in my morning video, because I do make a more morning video every day on Patreon for my top tier members on there, which again, that's linked down below if you guys are interested. We covered these because they came out this morning, but we could look again, obviously, since we're talking about John Deere right now. So let's take a look. They did, where is it here? Give me a second, guys. Here it is, $4.12 of EPS versus $3.90 estimated. So they beat EPS and they beat revenue. Sales came in at 11.33 bill versus 10.44 bill estimate. So double beat when it comes to John Deere here. And they see full year 22 net income between 6.5 to 7 billion. And I'm not sure exactly what the estimate on that was, so I can't tell you if that's above estimate or not. But one thing I can tell you is Q4, they did $4.12, like we just said, of EPS compared to the $2.39 a year ago, which is great. So they're doing pretty well, and it seems here they see full year 22 production and precision AG sales up 20 to 25%. Not too bad. And pretty much all of these different segments, they see the sales up, between 10, 15, 20%, which is good, 25%, some of them. So I'm liking the report that John Deere came out with. And again, the technicals are looking for a breakout, or they're setting up for a breakout, right? So I'm going to put my alert at, let's do it, maybe 370. I'll do one alert at 370, and if that hits on Friday, we'll probably watch it from there. Another one here is MTCH, and Siri's on my watch right now, being annoying as heck. Classic Siri, she just listens to us, and you guys probably know at this point, people will probably listen to us. That's just the truth, with these Apple devices, Google, Alexa, all that crap. But anyway, Match Group, ticker symbol MTCH. This one looks pretty solid. It's very oversold. It's gone from 182. Now it's at 137. It's down 25% in just the past couple of weeks, putting it into a bear market now. And you guys can see on the yearly chart here, this one is holding a textbook horizontal channel. I mean, this is as textbook as it gets, guys. We have clear support at 130, clear resistance at 175 to 180, and we've literally held 130 once, twice, 3, 4, now 5. This is the 5th time we're testing it, and we went up 2% today, up $2. So by the looks of it, if history repeats itself, which is not guaranteed, guys, nothing is guaranteed in the stock market, but if history repeats itself, we might see a nice move back up towards 150, 60, maybe even 70, since again, that's where we've gone many times over the past couple of months, all of 2021. So this looks pretty good in my opinion. And on the yearly chart, or actually this is the yearly chart, if I pull up the 3-year chart, one thing worth mentioning, which you guys have to understand, I'm actually going to put an alert at 130. Mark is at or below alert. If we break 130, which again we've held 6 times, 5 times throughout the whole year here, 2021. If we break 130 though, we're probably going to see a leg down. I mean, completely honest here, we're going to see a leg down if that level breaks. We'll probably go to about 100, 110, probably right by the 180 SMA here on the 3-year chart, which has held like clockwork a couple of times here on, over the past couple of years. So keep your eyes on Match Group. Again, if we hold 130, which we are, there could be some upside, but the second we break 130, guys, be careful. We're probably going to see a leg down at that point, or just more weakness in the short term. So watch out for it. I like it. I think there's value there. And the next one here is CRM, Salesforce. This one pulled back a couple of days in a row, and now it seems like it's a pretty good dip buy. And I should probably rephrase that. Not a dip buy. I'm not saying you guys should buy anything. I'm not a financial advisor. But it seems like a pretty nice dip. Let's put it that way. It's down about $20 per share from the all-time highs, 311. Actually, that might not even be an all-time high. Actually, no, it is. Yeah, it is an all-time high. Anyway, it's down from 310 to 289, which is about a 10% drop, so it's almost in correction territory. And by the looks of it, like eBay, it's holding the uptrending channel, and we're trying to get back over the 180 SMA, which is right around 292 to 293. And I think if we actually break out of there, so I'm going to put my alert at 292 for CRM here. If we get out of there, this might end up seeing a move back to 300, 305, 310. That is 100% possible. It's definitely in the cards, but it's not guaranteed, like I say all the time. And I said it in this video already. Nothing is guaranteed in the stock market, but we got to watch it. The trend looks good. The dip's fine. It's solid. It's holding the uptrend, and we're oversold. So this could end up bouncing back. We'll see, especially as the markets in general are looking pretty good. They close on a solid note today, like we talked about earlier in this video. So the next stock is MasterCard, MA, which, full disclosure, I own MasterCard. You guys in my Patreon know that. I've actually been buying up this dip. MasterCard did well today. It went up over 3%, up $11 per share. And this one, unlike eBay and what's it called? We just went over it. CRM. Unlike those two, which are in uptrending channels, MasterCard is in a downtrending channel. In fact, it's been in a downtrending channel for months, pretty much all of 2021, since we hit that all-time high just above $400 per share. And we just actually hit a low of 318, and that's at the bottom of the channel, or it was, right? So this one's in a downtrending channel. We just hit 318, the bottom of the channel. We got oversold, and I actually called this out as a nice play, and it seems like we're already ripping. You know, we're up to 340 from the low of 318, and I think there could be more juice left in the rally, especially if we break out of the moving averages, which right now are sitting at about 347 to about 348. And if those break, and we actually could see a nice move towards those, maybe at some point on Friday next week, if those break, we're probably going to 360 in the short term on MasterCard. And let me clear this up as well. I said I own MasterCard, but it's for a long-term position. It's not a short-term trade for me. And actually, I wouldn't mind if it went under 300, to be completely honest. Don't get mad at me, guys. Don't hit the dislike button if you own MasterCard here as a trade and you want it to go up. I wouldn't mind if it went down. You know, I wouldn't mind if it went down because I'd just be averaging down. It's actually my play for the payment processing space. And I mean, what else could you own other than MasterCard, Visa? Sure, there's some other ones, but I own MasterCard for the growth, and I would love to get it cheaper. And who knows? We might actually get it cheaper in the coming months. Who the heck knows? With the rates going up, tapering, stopping, that's probably going to have an effect on asset prices here in the short term. We might be able to pick things up, which is why I always say cash is a position. So the last stock for today is Applied Materials, ticker symbol AMAT, and I'll cheers you to that. Let me get some liquids in me, guys, because voice crack number 2 might be right around the corner. So give me a second. That's a good coffee. Okay, Applied Materials. If you guys recall, we called out this ascending triangle on the 4-hour chart weeks ago before it broke out, and then it broke out. The ascending triangle played out. We hit 135, 140. We broke it. We hit 160, which was pretty overbought at the time, and now we're pulling back. And you guys can see we're actually retesting the month-long resistance, actually multi-month-long resistance at about 145, where we got rejected at once, twice, 3, 4, 5, 6 times. We're retesting that point as support, and you're already seeing buyers step in, consolidation for the past couple of days there, and the RSI looks pretty good. We're not seeing a bearish divergence or anything like that. It looks solid. So I think this dip probably will be bought up. And let's say we do give at 145, we fall a bit lower. That's fine too. You know, I think we might be going to 140 at that point, right by the 180 SMA on this 4-hour chart. But in general, this dip on Applied Materials, I think it's solid. You know, I think anywhere from 140 to 150, that 10-point window, that's where I think buyers will be buying this dip. Granted, if the markets collapse, that's out the window. A lot of stocks are going to get hammered, but as long as the markets are looking solid as they are right now, like we talked about in the beginning of this video, I think buyers will step in, pick this up. Again, anywhere from 140 to 150. So that's pretty much it, guys. I hope you all enjoyed the video, found some value, got some insights on where my head is at, the markets, stocks I'm looking at. If you enjoyed it, hit the like button, drop me a comment, and most importantly, make sure to subscribe. Subscribe to the channel. We're trying to get 25,000 subscribers by the end of the year. Let's see if we can do it. Subscribe, hit the notification bell, check out my Patreon if you guys want all my moves. That's linked down below. You could also get $50 and 2 stocks. Well, hold up. $50 from M1 Finance, 2 stocks from Webull. Those are linked down below. And that's it. I'll see you guys later. Check out my video from earlier where I went over SoFi more in depth, lockup period, all that good stuff. We talked about it earlier. Check it out. I'll pop it up here. I'll see you guys there. Thanks for watching. As always, keep crushing the markets. Stay safe out there. Peace out, guys.